Welcome back to PhatBear Pod. I'm your host, PB. We're starting with Bitcoin's price action today. Let's just say it's been moving like a sloth on sedatives. It's hovering around 84K. Give or take a few $100 depending on which exchange you're doom scrolling. Volumes tanked too, down 38% to 18.2 billion, which tells you the market's either hungover or just too bored to care. The crypto fear and greed index is shivering at a chilly 27, firmly in fear territory. The vibe's a bitter cocktail of dread and regret. This is a crypto winter chill creeping in. Bundle up, because at 27, the greed's long gone and fear's running the show. Investors are freaking out because recession vibes are back, and we're all one bad jobs report away from eating ramen again. On the alt side, some coins are still defying gravity while the rest of us clutch our bags in despair. ZetaChain, API 3, Beam, and Curve are strutting their stuff with double-digit gains, leaving us bitter hodlers both jealous and skeptical. But some coins are also down bad, including Bounce, Orca, and Soul. It's not too surprising for Orca, though, since it pumped 270% last week after an upbit listing. Well, the party's over for now for the Solana's darling DEX. Time to move on to our crypto news. Fidelity is stepping into the crypto cage, launching a tokenized U.S. Treasury fund to square up against BlackRock's Buddle. Buddle isn't just some rookie. It's the undisputed heavyweight of tokenized treasuries. Launched on Ethereum in March 2024, it's ballooned past $1 billion in assets under management by now, backed by U.S. Treasury bills, cash, and repos, all tokenized into ERC-20 goodness pegged at $1 a pop. Enter Fidelity, stage left, with a chip on its shoulder and a tokenized treasury fund of its own. The details are still fuzzy. No ticker, no launch date, just whispers on the street. Fidelity has been dabbling in crypto custody since 2018 and tokenized a chunk of its institutional liquidity fund with Signum last year. This isn't a toe dip. It's a cannonball into BlackRock's pool, and the splash is already rippling to the TradFi crowd. Coinbase, America's golden crypto exchange, is in advanced talks to acquire Deribit, the Netherlands-based kingpin of crypto derivatives. Think Bitcoin and Ethereum options and futures, the kind of high-stakes gambling that makes spot trading look like a kid's piggy bank. Deribit's no small fry. Last year, it churned through $1.2 trillion in trading volume, nearly double 2023's haul. But why is Coinbase so thirsty? They've been dipping their toes in derivatives since 2023 with that Bermuda-based platform for international users. Nano Bitcoin futures, anyone? But it's been a trickle, not a flood. Their international exchange did $300 million in futures volume over 24 hours last year, peanuts compared to Binance's $56.6 billion. If Coinbase pulls this off, they'd own the door and the exit for a chunk of the derivatives market, which hit $70 billion daily for BTC alone last week, dwarfing Spot's $3 billion. That's a lot of revenue, but it's also a fat target for regulators. South Korea's Financial Intelligence Unit, FIU, the money laundering bloodhounds, is gearing up to slam the hammer down on foreign crypto exchanges operating in its backyard without a proper license. Big names like BitMEX, KuCoin, CoinW, BitUnix, and KCX are on the hit list. The plan? Block domestic access to these platforms' websites and slap them with sanctions that could make their Korean dreams a distant memory. Why the crackdown? South Korea has been tightening the leash since 2021. You want to offer trading, custody, or wallet services in Korea? File with the FIU. Get a real name bank account. And kiss anonymity goodbye. These foreign platforms, though, they've been waltzing in with Korean language sites, targeting locals with slick marketing, and raking in money from Koreans. But here's the bitter rub. This ain't foolproof. VPNs exist. Degens are crafty, and blocking websites is like playing whack-a-mole with a hydra. Plus, Korea's crypto scene is a global heavyweight. 15% of BTC trading at its peak. So pissing off foreign exchanges could spark a backlash or just push the action underground. Let's now move over to the DeFi space. Meteora, Solana's shiny liquidity darling, decided 10% of its Met token supply wasn't enough to reward its community. Nope, they've bumped it to 15%. But let's not kid ourselves, this is crypto, where generosity often comes with a catch. Increasing the allocation might just be Meteora's way of papering over delays, or keeping the hype train chugging. 2% is earmarked for the OGs, those early users from December 2023 to April 2024. The other 13%, likely tied to points racked up by liquidity providers since then. Now, could this be a good airdrop? Sure, a 15% airdrop sounds juicy. For the whales, that is. For the rest of us retail, it's probably not enough to cover the impermanent loss of providing liquidity for those memes. Another much-anticipated project will be dropping this Monday, March 24th. For the uninitiated, Nillions is fancy blind computing project that promises to process your data without ever peeking at it. Think of it like a priest in a confessional booth, but for your encrypted AI secrets. They've raised $65 million from big shots like Hack, VC, and Animoca brands, and they're live on Binance Launchpool. Posts on X are buzzing about the allocation checker that went live March 12th. You got gold tier folks snagging 1 to 3K nil, and diamond tier whales flexing more than 3K. Early farmers are hyped. Some are calling it the first impactful crypto app at scale. Others? Well, they're just here for the quick flip before the VCs dump their lock bags. Nillions had a slick pitch. Secure AI, private data, yada yada. The team stacked Uber, Coinbase, and Nike, but with the market still licking its wounds from Bitcoin's 87K fakeout. We'll see if there will be a nice pump following TG. Mega ETH, the Ethereum Layer 2 that's been hyped harder than a meme coin presale, launched its public testnet recently. And the numbers are enough to make even a jaded bear like me raise an eyebrow. We're talking 20,000 transactions per second out the gate. That's not some theoretical white paper flex. It's what they've clocked on day one. Posts on X are screaming about 10 millisecond block times, and the team's already teasing sub-millisecond latency down the road. For context, that's faster than my last girlfriend dumping me after I said, NFTs are the future. Is it perfect? Nah. Week 1 saw the public RPC crash after some genius spammed it with memory-hogging requests. But the team patched it faster than you can say, server reboot. They're aiming for 100,000 TPS eventually, and with $43 million in backing from Vitalik Buterin, Dragonfly Capital, and a pile of NFT sales, they've got the war chest to chase it. If they hit their endgame, this could be the first blockchain to make Web 2 devs jealous instead of the other way around. Lastly, let's talk about how we can farm Sonic's airdrop. The drop's coming in June, so you still got time to get on it. You've got to earn Sonic points or Sonic gems to get a slice. 25% hits your wallet day one. The rest vests over 270 days as tradable NFTs. First up, passive points, the lazy hodler's dream. Bridge some assets to Sonic's mainnet, USDC with, or their precious S token, and just sit on them. Whitelist assets like SCUSD, a Rings protocol stablecoin, or staked S come with multipliers. Up to 6x if you're holding fancy stuff like WST KSC USD. That's a lot of words just for a stablecoin. Next, activity points, where the real grinders shine. Take those assets and do something with them on Sonic's DeFi playground. Swap on Shadow Exchange, lend on Silo Finance, or provide liquidity on Beats. Every move racks up points based on volume and engagement. Then there's Sonic Gems, the wild card for the app addicted. Sonic's got 30 plus dApps, Vicuna Finance, SwapX, Yearn, each running their own points game. Devs snag gems, trade M for S, and sprinkle them on users however they damn well please. There you go. Hold trade or dive into dApps, and you might snag a chunk of Sonic's June jackpot. Me? I'm farming till my eyes bleed. Because in this game, free money's the only kind I trust. With that, I'll be signing off now. I'll see you guys again tomorrow.